Luke says, hey, Austin and Robert, I've been with you guys from the start. I love looking forward to your podcast every week. My question is about the FIRI and FIRS ETFs you've recently talked about on your webinar. I wanted to invest in them, but I don't know how they work. Can you please explain what they do in more detail? Are they long-term? I'm guessing they are, but I'm kind of just wondering what exactly the companies that are inside of these two ETFs. Thanks for everything you guys do. Great question, Luke. So long story short, these are the FIRE ETFs that we talked about on the webinar. So there's something called the FIRE movement, which is essentially saving as aggressively as possible, as much money as you possibly can, as early as possible so that you can retire early. Think like 40 or 50 years old. And the only way you can retire early is if you, again, save a ton of money, invest it, and it grows for you for 5, 10, 15, 20 years. Fast forward to 45-year-old Austin, and he could retire because his portfolio income offsets his monthly or annualized expenses. Now, when we talk about the FIRE movement, there's two specific phases. There's the wealth accumulation phase, and then there's the retirement phase. The FIRS ETF is built for people in the wealth accumulation phase. It is invested into the S&P 500. It's invested into all these different strategies like commodities and gold and things that do well throughout different market cycles. The ETF is broken down into 4 separate buckets that are optimized for 4 separate market cycles. Those 4 market cycles are prosperity, right? When things are going great, you want to be invested into US equities. A recession, so when things aren't going that great, you want to be invested into gold and things like that. Inflation, which means that if we're in a high inflation environment, you want to have those short-term treasuries. And then 4, deflation, which means if we're in a deflationary environment, you want to be in bonds. And so those are the specific strategies that incorporate into the FIRS wealth accumulation, wealth building sort of strategy ETF while you're implementing the FIRE movement for yourself. And then when you're ready to retire, there's the FIRI ETF, which pretty much just focuses on current income. So they've got bonds, they've got some covered call strategies, they've got things that are going to push out 4, 5, 6, 7% of annual income to you inside of your portfolio. That's the whole breakdown on the ETFs. The FIRS ETF has actually crushed it this year. It was in the green when we had our webinar, but it's only down 0.2% year to date. Again, because this wealth accumulation, wealth building ETF focuses on different market environments. It realizes the market environment that we're in right now and is diversified enough so it doesn't lose during this market environment. And so if you look at the price of the NASDAQ year to date, the NASDAQ's down 10%. QQQ is down 10% compared to FIRS only down 0.2%. So that's a 10% swing to the upside. It's an interesting ETF. It's really cool. They've got these different market environments that allow people to build wealth no matter what's going on around them. And we're really glad that we were able to find these ETFs and the people that created them and share them with you all.
Yeah, I really like them because I feel like they give people more safety in uncertain times. The strategy is really, really good, and they nailed the timing of it because right now things are shaky. Am I going to sell my QQQ or my VOO? Never. Those are just holdings that I'll always have. And they always go up and to the right, and they perform really well over time. But this is something people could look at if they want to be a little more risk off and have a little more diversity. So that's why I like these funds a lot.
I'm right there with you, man.